Enthusiasm is the electricity of life. How do you get it? You act enthusiastic until you make it a habit. Let's jump into the 3 time frame chart. I'm working on, whole team's been working on a training for you. We're going to put it together on Sunday and get it out that day to you on how to utilize the 3 time frame chart for your practice trading. Just another little tool in your box to help you be able to see what's going on at the same time on all 3 time frames, the weekly at the top, 2-day in the middle, and the half-day or 195-minute chart at the bottom, where you can see trends as they die and as they change, and then die again and change. We're talking up and down and up and down. And when you're viewing it on these 3 charts at the same time and adding in there the volume indicator, all we're using, this is as simple as it possibly gets. We're not using any kind of trend following indicator, anything but our average pace Heiken Ashi candlesticks and our volume. And I will tell you, I don't find anything any better. Now, you don't have to utilize this. You can stick with the old price percent oscillator. You can stick with the STC, but I at least want to baptize you in this and allow you to see it. And again, have another arrow in your quiver. I want you to use what works for you in your trading, in your practice trading, and in your training. And you take what works and you leave the rest of it on the table. I'm doing this for free. It's not costing you anything. So take what's good for you and leave the rest aside. I will tell you, these are the charts that I use on a daily basis for setting up my trading. This last week, I traded 4 different options. Every single one worked based upon these charts setting up. Now, things have been very good lately with trending, as you can see. Got a little sloppy back here when you got back into, let's see, this is back in May of 2022. Things moved down, popped up a little bit, moved down. We need good trending markets is what we want to see. And as long as things are trending and are giving you good points where you can jump in and then jump out without getting hammered, that is the best of all worlds. And again, remember, how do we make sure that even when we jump in and the markets go against us, we don't lose everything? Because I have said for years, and anybody who trades in the market will tell you, it is the losers that kill you. You have to cut your losses. If you don't cut your losses, and then, of course, when things are going your way, let your profits run. But if you don't cut the losses kill you. We do that, of course, by using all of those trainings that we have on average true range. Now, if you're not familiar with this chart, we did put a training out earlier in the week. I'll attach it at the end of today's video on how to set up this chart. It's very simple. It's nothing but Heiken Ashi candlesticks and volume, 3 time frames. You can see these vertical dashed lines on each chart. As you move one, you see it change on the other charts. And what that means is they're all tied together, which is so great to be able to follow movement. So let's see, as we ended this, as we got into this week, what did we see happening? If we go back to Monday of this week, Tuesday, markets were closed Monday, right? It was a President's Day. We can see how, if you look at the top here at the weekly chart, you can see that as the week started, the 2-day was already going red, and the half-day, the 195-minute chart, had gone into the red on Friday morning and then Friday afternoon. And of course, when we got to Tuesday, things were really starting to head down. We had volume decent as the week started out. We had decent volume on the 2-day chart, not as high because, of course, we were missing a day there at the end of the week. Things slowed down, first day of this latest 2-day candle. But look at how when we got through Friday And then into the Wednesday, Thursday, the volume really heated up. And again, things started moving down at the beginning of the week and continued. And you could see all of this setting up as we saw that hammer forming there. Lots of movement on the top, a little bit at the bottom, decent volume. You could see where things were already moving over on the 2-day and had well since topped out with high volume back actually on Tuesday of the week before. Things slid sideways and then started rolling over hard. Where are we now as we end the week? Down 1.07%. We are paying close attention to this 30-period exponential moving average. That's the week. That's 30 weeks of movement. We want to see it pass through. Could it bounce off? It could. That could be something that might slow things down. But where we look, where prices stopped in the past, we would expect it to move on through that. Now, again, it may not. If it doesn't, but let me ask you to look at this. Look at this candle that we see formed there. It is a red down doji candle. No movement on top, no wick on top, just a wick on the bottom. And as we look back in time where a down movement was initiated with that kind of candle on the weekly chart, do you see that ever not continuing to move? Let's tune into that, pop that up. If we go back in time, there's one, lots of movement after. There's one, lots of movement after. There's one, movement after, decent movement after. There's one, decent. But so I'm just saying, is it possible that this move may not work? It is possible. Is it probable? Have we seen it not work in the past? Going back, again, doing a little backtracking just on the fly for you there, we've not seen that. So we would expect that it would continue. Now, if it doesn't, of course, and we have entered a trade with things moving in that direction, initiating it as a weekly vertical crossover heading down, then of course we would enter our stop loss. Well, I don't enter actual stop losses on my trades, but I do, of course, use this tool over here under the prediction and analysis tools. I'd use a short position here and we would set that up. Or of course, since it is the S&P 500, what do we trade when we're dealing with the S&P 500 and going short? We practice trade the opposite, which is the single short for the S&P 500, PSQ. So, of course, it moves in the opposite direction when the S&P is going down. If you're not familiar with inverse funds, please take our training, Inverse Funds, How to Make Money When Markets Crash. You will understand it after that. But again, that is an option that we have. And of course, we want to set our average true range for our loss parameter. And then we want to also use the average true range to help us set our profit band. So again, these are a little bit of sophisticated tools, nothing too complicated. We try to keep everything as simple as possible. But we see a trend initiating on the weekly chart after being set up on the half-day chart, and we now have 3 candles, this one just starting to form, so 2.5 candles going in that right direction with decent volume on these prior candles. And again, if things continue on Monday and this volume finishes filling up, it should be above average too. We'll wait and see. But again, that's what we're looking for as we utilize these charts and can see the actions that are happening in every time frame at the same time. Isn't that beautiful? What do we see on the NASDAQ 100? Same kind of thing. We can see where things had topped out, high volume as the insiders were offloading their shares, and then everything started to move over of course, you can see where that volume was accelerating, heading down this week as we start on the weekly chart. Perhaps a significant move down on the Qs. Now again, caveat here, we're also at the 30 EMA, so that could be a bit of a hindrance. It may not be, but we'll pay attention to it. If we push down through it, then of course we can see where things came up to it before and rolled off, came up to it before and rolled off. We've pushed through here. Is this going to be a floor, or are we going to be able to push back through it again? We saw where things penetrated and then rolled back over in the past. Maybe that's the way it's going to go. Similar kind of candle to initiate that. Similar kind of candle last time. Do you see a pattern here? I do see a pattern here. We'll see if that pattern continues. Now, let's go to 20-year bonds. Again, we can see where things came up, bounced off, came up, bounced off. We're going into we finished the third week of down movement. In fact, I have been in for quite a while. You can see I'm taking you over to the short chart for 20-year bonds. This is Tango Bravo Foxtrot TBF. This is the single short for bonds. I've been in this trade. In fact, you can see this little box within the box here where it's a little bit darker green. That is where I sold half of my first position. And now I've let the rest of it run, and it's continuing to run here as this continues to move up quite nicely. I have done very well so far. I think I'm up 5.5%, something like that, just on this trade that I initiated back during the week beginning the 6th of February. Sold half the position when I hit the first average true range on the 2-day chart. And then I'm waiting to hopefully hit 2 times the average true range on the weekly chart. I wanted to take some profit out first and then allow the rest of that trade to run. Those are things you can experiment with and try for yourself. But as we look going forward, we again can see this move continuing. I am continuing to pay attention, looking to see if we're going to have a ceiling here where we did before. If so, I'll pull this trade at the beginning of the week if it starts to roll back over. Because again, we can see we're back on the 27th of December. Things peaked up and then went back into the red. So we'll wait, watch, and see. Maybe things will go as high as we had back where it topped out in late October at the 2483 mark, something like that. So we'll keep an eye on things and see where they are going. Let's move on to gold. Now, gold, recently peaked. And of course, what do we see here? It's important to look at what the volume's doing here. You can see the volume back on that week beginning Monday, the 30th of January. You had almost a doji here, high volume above the average and peaking. Of course, that's when all the insiders sold their gold to the dummies that thought it would keep going up. And then, of course, price just rolled over and has been going down since. Again, approaching this 30 EMA. We'll see what it does there. Will it just penetrate and move back through? Doesn't look like gold has had much trouble doing that over the last many trades, or last many cycles up and down. So we'll see if that move continues. But again, gold passing through the third week of decent down movement. We'll see how much further it will go down. I'd love to see it stop here, turn back around, and allow us to jump back into an up move in gold. But we're not seeing really much weakness there. Volume slowing down a little bit this week, but again, remember, it was a shortened trading week, wasn't it? Now, lastly, we'll go to Bitcoin. What is Bitcoin doing? Again, not anything super cool. Not any clean, look at this. Are these clean trend lines? Now, this is the weekly. Trying to find something to connect here. We can move it around a little bit, but we can hardly connect 3 candles together, and it just looks sloppy, doesn't it? Waiting for Bitcoin to settle out and again start giving us some trends with some reliability. Because my friends, if it's not reliable, the hell am I going to trade it? If it's just a crapshoot, go to Vegas, which I don't go to. I have no interest in going to. I don't want crapshoots. I don't want to say, oh yeah, I'm buying Bitcoin. I'm not going to buy Bitcoin. I'm not going to practice trade Bitcoin until I can track Bitcoin accurately. I hope that makes sense to you. You don't have to buy anything. You want to buy stuff that you can track that's going to move in discernible patterns. That's where we are, folks. I hope this has been helpful. I really do appreciate your feedback. Several of you have given me feedback that you really like this chart, that it makes a lot of sense to you, that it helps you see what's going on and makes it so much simpler following this largest of the 3 charts that we track. So again, let me hear from you. Let me know what you need. I do this for you every day. I do my own thing, and I give this out for free. And I do it because I want to help you. I don't want to hinder you. I don't want to waste your time. So give me some feedback. That's all I ask from you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.